Hello, guys. Hi, everyone, and welcome to day 4. I hope you all feeling okay. Feel free to type into the chat box, say hello, where you're from. For those of you who don't know me, my name is Amir, and I'm one of the traders here at Tradeology. So once again, welcome to everybody. And just a second here. All right. Okay, so to all of our friends watching us on YouTube and Facebook, also feel free to post in the comment section. If you just want to say hi, that's great too. If you have any questions related to the content of today's webinar, please feel free to ask any question. We'll try to answer as much as possible. Already day 4. Time flies when you're having fun. So without further ado, for those who don't know, on the web page www.acceleratingprofits.com, if you missed any of the previous sessions or any of the download gifts, you can download everything there, and you can watch the reruns of the previous days webinars. So day 1, 2, and 3 will be there from later today, or tops 24 hours from now, we'll have the recording of this webinar as well up. So if you missed any of the days or any of the gifts, feel free to jump to acceleratingprofits.com. You can find all the info there. Let's start. Again, for those who are just joining us, our host today is Mr. Adrian Jones. Now, he's a CEO here at Tradeology. He's also a full-time trader. He has taught thousands of students his trading techniques. He helped them become better traders and overcome their fears. So hello, Adrian. Hope you're with us. How you doing?
Hi, guys. And as usual, I just want to test my mic, see if everyone could hear me. Thanks for the introduction, Emir. I like the Mr. Adrian Jones part of it. Adrian for everyone, yeah, please. Yeah, so welcome back to those of you who've been joining me for the last few sessions. And to those who are for the first time here today, great to see you as well. As Emir mentioned, the recordings of the last 3 days of this challenge are on the page, and I'll remind you of the page again towards the end of this session. We're on day 4 already, believe it or not. I'm sure you guys know, and it's Friday. So I know a lot of you are keen to get going to wherever or are wanting to settle in for the night with your families and so on. So thank you for joining me today. Now, I had also thought that with the trading challenge being 5 days and me having given my second gift yesterday, the Astral, on a Thursday, it doesn't really give everyone as much time to, everyone greeting each other, as much time to trade as what they probably would have liked to during the challenge. So what I'm going to do is I'm going to give it an extra day. I think we should do that on Monday. And my next session will be not on Saturday, but on Sunday. I'll do it on a Sunday. I know some people are working also on Saturdays, and it might just be a better time to do it when we can all relax on the Sunday, with a cup of coffee and listen in. And then on Monday, that gives people a chance just to trade a little bit more and ask me questions on the Monday. So we'll do another 2 after this. And got some exciting things coming up. I've got something already worked out for you guys, which I'm going to give to you on Monday. I'll discuss that with you on Sunday. I just want to finish the design of it. It'll be another free tool for you. It's not a trading system, but it's something that's going to help you with your risk management and so on, an app. And I'll mention more about that on Sunday. So please do join me there, and I'll show it to you anyway by then, so you'll know what to get by then. And of course, we're still going to run our challenge. We're still going to run our contest and have all those free gifts to value of $750 and others to the value of $250 for you, which I'll announce then also on Monday. So there's still time to partake. And for those who've missed a few of the previous sessions or would like to look at them again, at least that gives us an extra day tomorrow to do that. Yeah, I know it's weekend and don't want to over pressure people on the weekend. But all right, so I'll start off. Let me just start my screen and start off the presentation. And thanks very much for everyone who's been here. I won't read out all the names. I think we can see them, but I'm grateful that you're here. Thank you. So let me just get this screen up and going and start this presentation. Right, so we're on day 4 of the 5/6 day challenge at the moment. And we've started the challenge, many of the people on here, and people have been commenting on the page, www.acceleratingprofits.com. They've been emailing me as I requested that they do with the action steps. So well done, guys. I've answered as many as I could on the comments up to now, and I'm sure there's a few that are left unanswered, but I'll get to those as soon as this is finished. And people have been telling me about, their trades, asking some questions, and it seems like the feedback overall, percentage-wise, I'm not too sure, but definitely well over 90% of people are happy with the systems that we've got over the last few days, and that's very pleasing for me, obviously, as well. And so thank you for that. And what we're going to do today is I thought, well, instead of spending a lot of time on statistics and whatever like we did the last few days, what I'm going to do is review some of the trades that people did send in to me so that we can all get to see, without disclosing, anyone's accounts or full names and so on, but we can have a look at some of the charts that were sent in and see whether I've got any opinion on those. And some of them might be yours, obviously. And if I've missed any out, I apologize. I'll try and get them in for the next one. And then I'm going to discuss we're still carrying on with our general theme, and I'm going to discuss a little bit about how you can increase your probabilities even more with either one of the systems that we've got or that you've received in the last few days, or any system. And then towards the end, a bit later, I can follow up with answering any questions that you might have with a short Q&A session. And then right at the end, I'll remind you again of where you can register for the next day, which will be now Sunday, so that you know where to go. So thank you for waiting for me for that. So what's that? All right. So that's basically what I just mentioned at the end of the session. So let's have a look at some of these charts that people have sent in. And I just want to move the Zoom box out the way. Just remember again that you are able to, I think, unpin it, or if it's getting in your way there. And also welcome to the guys on Facebook and YouTube. I forgot to mention. Of course, you're welcome here as well. And all right, so here we go. A trader sent one of these in over the last couple of days. Nika, perhaps you're here, Nika. If not, you'll probably pick this up on the recording. Here's my entry today. It was a win. Place the exit near the resistance rather than the 1-to-1 risk to reward ratio. So on the chart here, Nika had highlighted with the profit wave system where he had entered a trade just at this point here, and he set his stop loss here and he exited here. Now, it looks like it was fine according to the rules, Nika. And stop loss was well set there, just below the most recent swing low. The difference with you was that you said that you had a 1-to-1 risk to reward ratio that would have just exceeded the nearest resistance level. So for those of you who have been following along over the last few days, you'll know in day 2, I discussed support and resistance levels and how they would be important for entering and exiting trades as an additional tool that you could use. And Nika has done it from the point of view of where to place his exit. So I can't really draw it on here, but there you could see would have been the nearest resistance. The highest point there would have been a resistance level. So if you imagine a line being drawn across there from there, and instead of targeting above that, thinking that price might turn back again at that line, Nika set his exit there, and we can see that obviously did well to do that. And it is an option that one could do. So nice, Nika. It gives us a little bit more insight into how to trade that. And here's one from Howard. Quick trade while entering, I entered while hunting for setups this evening, developed fast, was able to get out after the initial London move, 11 pips for half a lot size. Best Howard. And on the left here is his entry, and on the right is his exit. And you're using line charts here, obviously, but pretty much similar to candlestick charts. That would be fine. I mean, it obviously works for you. And what you were doing was looking for a trade. So you had entered the trade. Couldn't see exactly. Yeah, it would have been around this part here of the Heikin-Ashi, where you see the red there. And set your stop loss just here. I might have set it a bit higher, just above that that wick. But still, at a 1-to-1, you eventually, within just two bars there, 2 lines, you hit your target. So well done. 11 pips made for you, Howard. And here we have Jeff, who made $106 on his demo accounts, attached the screenshot for the trade. And I think you highlighted this vertical line here as being the candle, the signal candle on which you entered. And we could see here you obviously went short, you sold. And the blue line across the red line there, and the bottom indicators were in confluence. So everything was in agreement. I couldn't see too well, whether probably at the time that you took this, the blue line had in fact crossed. But if not at the close of this one, it would have at the open of this. And but I'm presuming you did see it that way. The lines are probably quite thick here on this image. But you would have set your stop loss. You entered around here. You set your stop over here, which was fine. It was just a little bit above the most recent swing high, which was good. And then a 1-to-1 risk to reward, and it did eventually play out. Now, if that hadn't yet fully crossed and you weren't sure, it looks to me like you could have entered on this candle here, the open of this candle. Then definitely you would have seen that a cross had occurred, and the other indicators were in confluence. They were all in alignment in terms of the rules. You would have still set your stop loss at the same level, and your target then would have obviously been a bit further, probably down here somewhere, and it would have also eventually hit your target here. So well done there, Jeff. And JR, perhaps you're on the call here, JR. Simple rules, you feel confident. Thanks for sharing this with us, JR. You took a screenshot of your screen showing you were trading. Nicely done. It shows you've taken a step at least. Appreciate that. And how Adrian and team taken on the 9th of July. Couple of modifications, otherwise exact profit wave strategy. Greg from Australia. Oh, and Greg, when he wrote this in to me, said I don't know if he's on now, Greg, but he said he because of the time zone difference, he wasn't able to be on, but he has been watching. And Greg, let's just review this for Greg. He entered the trade at this point here. All right, so the blue line was above the red line that had crossed sometime previously. And for quite a while, the step MA was already above. We had a blue arrow, blue line above the red. And at this point here, when he had entered the trade, there was a cross of the blue above the red. And now, interestingly, what Greg has done here, similar to our stop loss, support resistance lines, he drew a trend line and waited for the trend line to break. So that is another technique that you could use also. If we had set a resistance line here, it would have been just a little bit more parallel. And you might have entered a little bit later, but that's fine. You've used a trend line as an additional confirmation. So you entered there, you set your stop loss just below the most recent swing low, and you targeted 1-to-1, looks like, and you would have hit your target there. So well done. And I think let me just lean in a bit to read this. Waiting for blue to cross downwards. So at that point, you were also waiting for another trade. I'd be interested to see if you did get one. Thanks, Greg. And all right, so Howard, I think it's the same Howard, sent us in a different screenshot on a different day. And successful setup, price hit exactly on my take profit mark, but the bid-ask spread was just a bit greater, so it didn't trigger. It was successful setup though, and the you didn't find any other trade there, looks like. So price dropped to there and bounced off within 35 minutes. I'm still in the trade. So at the time he was taking this, he was still in the trade. So thanks, Howard. So what we could see here is that you waited for the, well, let me see if I can expand this image a little bit. Oh no, it won't do it. It's gone up. But you entered over here with your red candle, your red arrow, and there would have been just had been across there. So at that point there, the green line, and all that I'm not too sure at that stage whether this blue line was below the red line, Howard, because the image is a little bit squint, but I'm assuming that that was the case, and you entered there. You put your stop loss above the most recent swing high. Again, probably a little bit too close. I'd put it out by another pip or so there, I think, Howard. And then 1-to-1. And what happened for you, as you mentioned, it actually touched the line and then bounced back up. So what happens is the spread, the ask price, basically the broker wanted it to cover his fees by that stage. So it would have had to go down by another 1 or 2 pips, but that's just coincidence there that didn't quite close the trade. But for the most part, that's excellent. You've got the rules under control there, so that's good. Now Tozen says, please find attached my before and after made with a profit wave. And I'm just realizing now I don't have your after picture here on the screen, but I've got your before. And you had entered the trade, obviously, and we're waiting for the trade to have played out. You had set your entry point along this green line here. Just thinking that you probably were going short here and you were waiting for this to close. So if that is the case, I'm not too sure because I couldn't see exactly where your entry point was on that. But it looks like you were waiting for the trade to play out, and it did, and you wanted to show me that it had. And so well done for at least sending me through that. Thank you, Tozen. And another one from Wayne Steele. And Wayne, you've got a lot going on here. This is the profit wave system with a few additions that Wayne had made. Fractal, zigzag, spread, income optimizer meter, daily range, Fibonacci to automate trend lines and high-low markers. Wow, you've got a lot going on. That's well, if you find that these are extra tools that help you, Wayne, for the most part, I think for the profit wave, it would be sufficient to trade it just as is, bare, raw, with just a few other things, a couple of trend lines perhaps, as some others have used, like Nicola. And but definitely support resistance could help you. You don't need to, but it could help you. And what I'm going to show you today a bit later after this would also be able to help you. But glad you sent this through to us. Thank you for doing that. And Samuel, you made $10 profit using the profit wave, taking a screenshot of your trade, and it looks like the trade had played out somewhere around here, that you had hit your target here, going short. So you would have entered somewhere there and gone, set your stop loss up here, entered around this region here, I would estimate, just based on that, probably on this candle or so, or this one, and set your stop loss above the most recent swing high, which would have been fine, and 1-to-1, and well, within a few candles, you made your $10. So well done there, Samuel, for sharing that. And Dennis, it's a bit small on the screen. I realize my screenshot of my latest trade. I'm still in the trade at the time you took this. It does look to me like with the profit wave system, the lines were blue. You had the red arrow. Everything was looking down. So all in confluence. So you're still in the trade. I hope that played out for you, Dennis. And thanks for sharing that. And let's just see somebody else here, Charles. Saying thank you as fellow South African. Thank you, Charles, in the Garden Route, that's in the Cape. I'm now new to trading. I'm very new. In the past 3 days, you've motivated me so far to open an account. Great. And showing my shot of profits with the Astral. All right. Thank you, Charles. So thank you for sharing that, Charles. And I see at that time you were in for a lot size of 0.01, so quite conservative. That's fine. You 0.09, 9 cents profit so far at the time you took this. Well done for taking that step, Charles, and for being conservative in your account approach and for sharing this with us. I do appreciate that. Now, another person here, Cardell, at a winning trade, wasn't sure where to post it. I'll show you again at the end of this for Cardell or for anyone else, but you just wanted to let me know at least that you had bought into a trade on a small account, looks like, with a profit of $2 or so. So thank you, Cardell, for showing us that. And Mabinta entered a few trades with the Astral trend finder. Very easy technique he finds, as long as we follow the rules. Thanks, Mabinta. And you, looks like we're just at the stage of finalizing the trade. You'd set your stop loss above the most recent swing high. That looks perfect. Similar to another trade that we saw just now. Perhaps it was the same pair and at the same time. And you would have entered around here, set your stop loss down, your take profit, sorry, at a 1-to-1. And it looks like you're about to hit it at that point. Also on a small account, also trading conservatively with your lot size. Great. This is how we practice. Well done, Mabinta. John, short trade setup with a profit wave from the 9th. I believe all the conditions were met, including the MACD blue line, small orange MACD histogram. But all right, so let's have a look. And we've got an entry here. And your take profit, your stop loss. So I would have probably, you entered on this candle, looks like. Let's see, it was, yeah, probably at the end of this candle, because that had turned orange. This had just crossed, so I'm presuming it would have been on this candle here that you would have entered. If that is the case, I would have likely have set my stop just above here. Above this point here, I would have considered that to be my most recent swing high. There's a bit of a higher wick here. And it would have been similar though. You would have had a similar outcome. So well done to you. Looks like 27 pips profit for you there. Excellent. Well done, John, for trying that out. And so I caught this in the US. Oh, I'm not sure who this was. Increase your admin. Thank you again. But showing, it's not too clear on the screen, but we can see that we're in a trade and you were waiting for the trade to play out, having entered the trade here. And can't really see too much else. You would have probably been going long at that point and very close to target. Okay, so thank you for sharing that. Sorry, I didn't have your name up there. Charles again. Please see below screenshot of profits using the profit wave. So you wanted me to see that you had made a profit, and I see that you were in $1 profit there on that trade. Well done, Charles. And so by now, I hope you have had a chance to trade with the Astral Trend Finder as well. Like I mentioned at the beginning, I know I just gave it away yesterday, and people are still trying to get used to the profit wave. And we got the Astral, and now the markets are basically going to be closed in a couple of hours for the weekend. So I see a few of you have had, and if not, you might still have a chance on Monday. But definitely what you could do is you could go to the charts. You'd still be able to get onto your MT4 platform later today or in the weekend or whenever you want, really, and scroll backwards in the charts and look for setups and try and get to familiarize yourself with the setups. Because the more you look at the charts, as I mentioned, the clearer they become. And the more example type trades you see, the clearer it becomes. I often do that with my students. I'll take them through the charts backwards and forwards, because I think the charts themselves will tell you much more than just a short description of the rules. When you're looking at the charts in real time, you get to see a lot of different movements and different questions come to mind, right? So yesterday we covered the rules for that, and so I won't repeat them again today. However, you're welcome to watch the day 3 presentation. That's yesterday's recording also for more details about that. And perhaps I can just stop there before I continue. Emir, any questions before I get to the next section? Any comments that I should be aware about?
Not just yet. We've already only had like a bunch of hellos and so
All
on.
right.
So yeah, I think you can continue. Then once we come to the Q&A, we can address those.
All right, great. Thanks, guys. So you're welcome to, as I said, post some questions or just comments even in there. And Amir's keeping an eye on them for me because it's hard to read them and do the presentation at the same time. But I'd appreciate, any feedback. And today I want to focus on some extra strategies in a sense that can be applied to both the Profit Wave and the Astral Trend Finder, and in fact, every system out there. I'm going to focus on something called patterns that will increase your probability. They're not strictly speaking part of the rules per se, as of course you won't see this in the rules. But if you're a trader with any degree of experience, you would be looking at what I'm about to show you now. And for many of you who are on here, I think we saw from our poll yesterday that not everyone is a beginner, but there are a lot of beginners on. People that, as we've just seen, have only been trading even for a few days or have just started learning, and others who are obviously much more advanced. So for those who are very much more advanced, what I'm about to show you is probably something that you already know. Maybe it could be a good refresher for you. But it's definitely something that I think we need to know. But because looking at the charts, we've got all the systems, and now we've also got the main chart, and that is price action. And one of the biggest factors in looking at a plain chart, even without the indicators, is what patterns can you see just from looking at the chart. One is support, one is resistance. You can draw trend lines also, but there's another important one, especially if we're trading the kind of charts that we've been looking at recently. So we ask, how realistic is it for a system to continuously have a good rate? We looked at that yesterday. And we, as Forex traders, want to improve our odds when trading at all times, right? So you never stop learning in that sense. You always got to, I'm always on the lookout for new techniques, new ways of looking, insights into the market and so on. And we also saw yesterday that instead of focusing on short-term gains, we should analyze the long-term performance of a trading system and how effective the win rate is. And we also learned in previous sessions, I covered briefly the trend, whether it's going up or down, and we want to try and trade with the trend generally. The trend is your friend, especially with these systems. You don't need to swap down between time frames, but you just want to keep an eye on the trend, the general trend over the last few days. And that we also had a discussion about how your psychology, the market psychology, can affect the outcome of your trading. So it's just a brief recap of what we've gone through already. Now, our job as traders is to make informed decisions with a balanced judgment, minimal bias. We've got to step back, be as objective as we can, and that we should all look for a few things. There are a few things to look at the market at all times. So we've got to determine the current trend generally. Is the market going up over the last few days? If so, you're looking at trying to get into more buy trades and possibly sell trades, and vice versa. So you'll be on the lookout for buy trades if it's going up or down. But you can still take sell trades in a uptrend situation, but just you would expect more to come into play. And we looked at using support and resistance. And the other important thing is to know the price patterns. Some price patterns in the time that we've got to do this challenge, that we're doing these presentations. Of course, this can go on for a lot longer than the times that we've set. And, towards Sunday and day 5 and now day 6, so to speak, I'll be telling you how we can do that also, because we're trying to fit a lot of information in here. It's a challenge for everyone to get this done as quickly, as efficiently and as compactly as possible. And so we're going to look at some price patterns. And I call that kind of the triangle trading pattern based on market structure, those 3 key elements. So market structure traders who look at the market and how it's structured and so on, know how to analyze and adapt their trading plan accordingly. So what are the common patterns we can look at? Well, we must remember that patterns inform traders of the current market psychology, and there are many different types of patterns. And as I've just mentioned, we can't literally go through all of these within the time that we've got, but I can go through what I think you should at the very least know and would be able to help you. And there's different types of patterns, as you can see on your screen there, so that you can understand the dynamic between different nuances in the market. And I'm going to cover at least one today and another one on Sunday. So we get a very good idea when using these where the market is headed by analyzing all of these, especially those I've already covered, and what we'll discuss today, which is going to be more about looking for certain patterns on the chart just with looking at the candles. And bear in mind also, these support resistance levels that you're looking at, these candle patterns that we're going to look at now, and I'll near the end, I'll go on a chart and relate them to the systems that we're trading. We are not the only ones looking at these, right? The institutions, the hedge fund managers, the traders who are working for these big conglomerates and whatever you, reserve banks and whatever you of the world, they look at the exact same pattern. So if you can identify what they are identifying, you've basically got an insight into where, as we've seen, the majority of Forex trades happen through the market moves, mainly through these guys. And if you're able to predict what they're looking at and where the market might go based on what they might be looking at, well, then you've kind of got foresight into what might happen going forward, right? So you want to increase your knowledge as much as possible. So now what I'm going to do, as I mentioned, a lot of the more experienced traders will be familiar with a lot of these type patterns, but maybe it's a good thing just to go through. You might pick up one or two extra ones that you weren't aware of. And for those of you who aren't, I'm going to really try and run through them because there's many patterns, but it's just to give you an idea as you're going through. I just want you to be aware that there are patterns, that one or two of these might stick in your mind. And every time you look at a chart, you're going to start seeing patterns other than just the system. No matter what the system is, you're going to be looking at what exactly is happening. It's not just the case of the markets moving up or that we have these candles on the chart. Why are some of them smaller or larger? Well, how does this influence our trading at all? So let me just give you a quick introduction to this, right? For those who are new, and I'll try and do this quite fast because I don't want us to be too late going through all of this. But Japanese candlestick charting is one of the most common ways of charting used today, right? This is attributed to the fact that throughout history, it's been used to provide an easy, practical, and simple means of interpreting price. There are many different kind of candlestick patterns. The kind of charting is so called because it was first used by the Japanese to trade rice since the 18th century. And a chap there by the name of Munisha Homa, the father of Japanese candlestick charting, is the Japanese rice trader who first used this charting technique to predict price movement based on historical data. So a chap by the name of Steve Nielsen, who then discovered how the Japanese used this charting from his own work, and the whole he started using it in his own work, and the whole world then became opened up to candlestick charting. Now, this technique has evolved over time and is used throughout the world. So whether you're in Japan, China, America, or anywhere else, the UK, you'll find that the charts are the same, and you'll find candlestick patterns and candlesticks on your chart, right? So there's many reasons that this form of charting gained popularity and remains widely used today. It's applicable to any trading market, and it allows analyzing the markets with other technical analysis tools, such as technical indicators, such as those that we use with the profit wave, such as those that we use with the Astral trend finder, for example, and other systems that you might be trading. It also allows traders, investors, and financial institutions to analyze price behavior from an artistic point of view, so to speak. So as I mentioned, these guys, the financial institutions, are looking at these patterns also. And In conjunction with other forms of technical analysis, it can make better decisions in your trading. It's quite remarkable that one or a set of candlesticks with a particular appearance in a particular manner can reveal the market sentiment of the given time frame also. And can also show which direction the market will most likely move in accordance to the time frame it's found. And in this section, we'll come to terms with the concept of candlesticks and charting. So you might be quite familiar with them, as I mentioned, but it's always a good idea just to review the basics before, we talk about more complicated things like the systems and so on. And let's start just with what a candlestick is, because we've been talking also about, for those who are beginners, about the open or, into the trade at the close of the candle, at the open of the next candle, and not everyone might really understand what that means. And it's a vital thing to know, because that's where our entry point is. And as I mentioned yesterday, you want to know your entry, your exit, and you want to know how to limit your risk with, for instance, stop loss. And unless you're certain of each of those, then really you are not going to be successful trading any system. So the data on a candle includes the open of the candle, the high of the candle, the low, and the close price of the day. So don't worry, guys. For those of you who know about most of this, I'm going to cover more detail in just a few minutes. So we'll get to the meat of it just now, but let's just complete this. A complete candlestick is composed of a real body and a shadow on both ends, also known as wicks or tails. And I'll get to show you some images here. So the image below shows the parts of a Japanese candlestick. On the left, we have what's known as a bullish candle, an upward moving candle, and on the right, the bearish or downward moving candle. And as you can see there on the screen, you've got the high of the candle, that's the highest point in the candle, and the lowest point. You've got a lower shadow on both and an upper shadow, and then that rectangular block, that is called the real body. And on a bullish candle, you'll see on the left there, a bullish candle will open from the bottom and close on the top. And a bearish candle will open on the top and close on the bottom. Now, bearish means downward moving, right? Bullish means upward moving. And you can always think of it, people often, also just an interesting fact that why is it called bullish and bearish? Where does this come from? Well, in the old days, what on the stock exchanges and so on, they used to consider that a bull would bend down and raise his head upwards, right? And a bear would grab you downwards. So that's more or less the history of where bullish and bearish comes from. But when we're talking about bullish, we're talking about an upward momentum in the market, and bearish downwards. Okay. So the real body is rectangular in shape and starts from the open price and ends with the close price. The upper shadow indicates the high prices, as I mentioned. Lower shadow indicates the low prices, right? Subtypes of candles don't have a real body, a wick, or both. And we'll come to that in just a moment. Now, the color of the candlestick's body displays the direction in which the price is going traditionally. Traditionally, traders would use a white candlestick to show bullish candle and a black one or a filled one for a bearish candle. Now, on our systems, of course, you will see that the candles might be blue when they go up and red when they go down. You can change them to any color you want. And it's more interesting, I think, easier on a presentation to show people there's a red and there's a green, so that they know the difference just by visually looking at it. But the more experienced traders actually use mostly white and black candles. So you might see that quite often, and that's the reason why. And because of the modern charting software, as I mentioned now, our charts can be adjusted to preferences. So usually a lighter color is used for the bullish candles like green or blue, or a darker color used for the bearish candles, downward moving candles, red. All right, so that would be some examples of that. So you might also see, if you're looking at different systems with different colored candles, wondering why are these all different color, you can change them to whatever color you want. But these are the kind of standard colors that one would find with any candles. Now, the length of the candlestick's body also indicates the strength of price movement. Long bodies, when it's a very long candle, show that there is strong buying or selling pressure. And we'll have a look at that now. So in the image below, you could see a long white candle indicating that there's strong buying pressure, while on the long black candle, which is a downward moving candle, indicates strong selling pressure. right? So you'll see these obviously on your charts. You'll be able to see, wow, there's a big candle moving. And obviously the bigger the candle, the stronger the momentum in that direction. So if you're looking to buy and you're getting these big candles, you know, well, obviously the price is heading in the right direction. If on the other hand, you're in a buy trade, trying to trade upwards, and you see these strong long moving candles downwards, you might well consider then that the momentum has changed in the opposite direction, obviously. So the candles with short bodies indicate little buying or selling movement. They're indicative of consolidation. So when you see, just as on the image, those smaller versions of the candles there, the market is kind of trying to find its place. It's just trying to settle down between people who are buying and selling, the buyers and sellers. You know, it's kind of just trying to find consolidation. And the shadows of the candlestick also indicate some information depending on its presence and length. A bullish candle without an upper shadow, that little wick, indicates that the highest price reached is equal to its close. So it closed at its highest price. And why is that important? Well, when it opens, when the next candle opens, you would expect that it might still go upwards, right? So it hasn't gone up, come down and closed down below. In other words, there's still a downward kind of movement happening there. Now, conversely, a bearish candle without an upper shadow indicates that the highest price is equal to its open price. So it would have opened there and moved down. Very basic stuff here for some of you, but I think it's interesting for many others. And our short shadows, short little wicks, as they're also called, indicate the price movement occurred near the open or close of the candle. So we'll have a look at some of these now. So long upper shadows, and also referred to as wicks, these lines here, indicate that the price has moved higher than the close for a bullish candle, or open for a bearish candle, as I've just mentioned now, right? So let's move on to the next one now. If the candle has a longer upper shadow, it means that the buyers pushed the price up, but the sellers were able to close the candle at a much lower price. So, you know, it went up, but then it was pushed all the way back down. The market started retracing. But this still gives you an indication of where the high was. What was the highest point that candle reached, although it only really closed over here. Okay. Now, these candles are usually found when the price was going upwards and is about to reverse or retrace. So when you see these kind of long wicks, it's an indication that the market might retrace in the other direction. So you could see that if you've got a bullish candle and then it traces all the way down, you could expect that maybe the next candle that opened might also go down. So it could signal the opposite, a reversal happening. And the same with the other type of candle there for the sellers, bearish candle. Now, long shadows indicate the price has moved lower than the open bullish or close bearish of the candle. I think we've pretty much covered that, and similar there. Now, candles with lower shadows usually appear when the price was going down and it's about to reverse or trace. And let's get to the next part now. A candle's body may be more significant than its shadow. That's that rectangular part of the candle. But the information you get from both parts must be taken into account. You've got to still bear in mind the shadow or the wick of the candle, not just the body of the candle itself, right? So, so you'll often see, actually, when I say put price above the most recent swing high, I look at that shadow, the toppermost part of that shadow, the toppermost part of that wick, and above that, not above the body, that rectangular part of the candle, right? So it would be above the wick or the shadow. And it's important to consider a candle's position relative to the candles surrounding it also. So not just an individual candle, but how does it compare to the candles around it when analyzing market behavior? And recurring patterns on the chart help traders identify where the price will likely go, where it might go. And this is what forms candlestick patterns. And we'll get to look at a few of these now, the most common ones. Now, every kind of candlestick you see on the chart falls into a specific type of classification. And there are many. Now, we don't have to cover all of them yet. It would be just too much, but I'm going to cover a few that I think you're going to see come up over and over again. And then we're going to look at them on a chart with the profit wave system and just see how we can identify whether that would have helped us enter a trade or not, or get out of a trade even. Now, I classify these candles regular because they are characterized by having complete parts with regular lengths. So when we talk about a regular candle, these are candles that have no particular attribute. They're kind of our base candle. They will they'll serve as our baseline for identifying other types of candles. So you might just say this is a base candle where that looks as such, where you have your close and your open and a little bit of a wick on the top and a little bit of a wick on the bottom. So that would be a base candle. And from that, we'll identify the difference with other candles. So one of the most commonly known candle formations is that of a doji. And you'll hear that coming up a lot. And many people also misinterpret sometimes what a doji is with other types of candle patterns. But you'll hear this coming up often with traders talking in a doji. A doji is a candlestick with an equal open and close prices. And I'll show you a picture of it now. Or if they're very close to each other. So doji candles represent indecision and indicate possible reversal prices, right? So here we have a few different types of dojis. So there's kind of subcategories of dojis. And just on the left here, the most basic type, which you could easily identify as a doji, is when price looks just like basically a cross and or a very small body. You can see there that there was neither an upward movement or a downward movement. The sellers and the buyers were almost equal at the, in trying to pressure the market there. And then we have something called a long-legged doji, which just means really that the wicks are quite longer. We've got what's called a dragonfly, where there's a very small body right at the top and a gravestone where it's at the bottom, and something called a four price, where you don't even see the wicks, you just kind of just see the body. So you'll identify these, I'm sure, as you're going through your charts. Now, you don't have to know the names and terminologies, just to be aware the patterns. These would be dojis, and they would signify a potential reversal is coming up. And we got the long-legged doji, and as I mentioned, you know, you've got shadows or wicks on either side of equal or almost equal length, and also indicates a change. The dragonfly doji, the longest shadow at the bottom, and then also if the market was in a downtrend, the price may go up, but it's important to wait for the bullish confirmation to ensure that price will indeed reverse. So, you know, these formations give us an indication, but we oftentimes with these candle patterns would rely on an extra confirmation, and an extra confirmation could be one of the indicators in your system or the full system itself. So we've got the gravestone doji, the opposite of a dragonfly, and from an uptrend. So if you're in an uptrend, in other words, price is going up and you see this pattern, it could indicate that there's a bearish reversal imminent. So it's about to perhaps go back down again. So just wait for another confirmation that price will head down. Perhaps it's, for example, a support line that will be broken downwards and so on after, or a trend line or something along those lines. And the floor price similar to that. There's not enough price movement. One should not really take any trades at that point. You're not really sure what's happening. And you might find these type of full price dojis towards the end of the trading day. When I mentioned, you know, the market tends to tail out and start ranging, and at the beginning of the trading day, as it gets quieter, there's no real impetus in either direction. Now, hammers are very popular candlesticks as well, and many of you will be familiar with them, but let me just cover that for those who aren't. A hammer is a candlestick with a long lower shadow, and I'll show you an image just now, which is 2 to 3 times the length of the body. So the body is fairly short, and it has little or no upper shadow. It tells us that the sellers pulled price very low, but the buyers managed to close it back up again at a level higher than what was expected, and usually appears in a downtrend and indicates a possible bullish reversal upwards, right? However, a bullish confirmation is necessary before entering a buy trade. So let's have a look here. So here's an example of a hammer. You can see visually it looks like a hammer, right? You've got this long tail here, but you've got a bit of a body. It's not like the dragonfly or the gravestone, which are just flat. There is a bit of a body there, but obviously price moved down, but then came back up. And same here, it could be a bullish or bearish type of looking hammer. Doesn't matter what the color of the candle necessarily is there, but you just want to know that this is a hammer formation. So this is 2 to 3 times the length of the body. Okay, and although usually confused with another type of with a hammer is something called the hanging man. And this is different. It might indicate the price has reached the top or resistance level and a bearish reversal is underway. Looks like a hammer, but it's found during an uptrend. So we saw the hammer is found during a downtrend, and the hanging man is found in an uptrend. And I'll show you one just now. Now, let's see. Now, the long shadow, lowest shadow beneath it indicates that the sellers were able to lower the price, but the buyers managed to bring it back up to the open and could indicate that price may reverse to the downside. So let's have a look at that. So here we have a hanging man. So basically a hammer, but not quite. It's at the top of a upward moving trend, and then it shows a reversal. Now remember, we saw with the hammer, it was the opposite. You see this kind of formation when the trend is going down, then it's called a hammer, and when going up, it's called a hanging man, and a good signal of a possible reversal. Now, shooting star, something else that some may be familiar with, a candle with a small body, a very long upper shadow, and almost no lower shadow. It appears when price has been increasing and is considered a bearish reversal candle, the exact opposite of a hammer. So you see it's almost like an inverted hammer, right? And it indicates similarly when in an uptrend, you see a shooting star, it could also indicate that we're in for a reversal to the short side. And an inverted hammer looks just like a shooting star, but it appears when the price has been declining and is indicative of a bullish reversal, right? So the long upper shadow of the inverted hammer indicates that the buyers have attempted to raise the price before the candle closed near the open, and sellers are running out. The buyers are picking up strength. This indicates the price will go upwards. So we have here an inverted hammer at the bottom, right? So shooting star at the top and an inverted hammer at the bottom. Now, the spinning top is a candle with an upper and lower body or shadows that are longer than its body and usually represents indecision. So right here, we've got a bit of a body, but big wicks on either side of that, and that's called a spinning top. You could basically picture that as something you could spin as a spinning top, right? And here, similarly, it indicates indecision. So the market is likely not to move very strongly in one way or the other, or it could move shortly. If it was in a strong uptrend and we suddenly get a lot of indecision, it could actually show that you might see a reversal coming soon. But it could indicate there's no more buyers in an uptrend, for example, and the price could go down. Or in a strong downward move, it might mean that there's no more sellers, basically not enough momentum, bearish momentum to continue downwards, and that price may reverse back up. So here's an example of a spinning top near the end of a downward move. And just after that, you could see the price started heading back up again. And the long lowest shadow is a candle with a long lowest shadow, or equivalent to the length of the body, more or less, and a short upper shadow is considered a bullish reversal candle. So this is a long lowest shadow. We've got a bullish potential upwards with any candle that looks like that. And let's move on just a little bit, because I know that some people are very familiar with these. And on the other hand, with a long upper shadow, equivalent to the length of the body, and a short lower shadow is a bearish reversal candle, right? In fact, I think it should be the other image here on that, showing that. All right, so we've got something called a Marabuza. Don't worry, guys, I'm going through this as quick as I can. Unlike other types of candles, the Marabuza has no shadow on both sides of the long body. And this is a Marabuza. You don't see any wick at all. And it can be found in bullish or bearish trends. The high is equal to the close. So it closed, it opened where it opened, and it closed where it closed. There's no wicks or shadows on either side of it. And a white Marabuza, well, if it's white, if you are using white as your color for a bullish candle, usually indicates the beginning of or the continuation of an uptrend. So if you see a Marabuza, it could show you that the trend is about to go up if it's a bullish colored candle. And then obviously the opposite would be the black one. If there was a black one here, I've still got the white image, fortunately, but it would show you that it's in the opposite direction. Now, there are a number of candlestick patterns where together candles are used in forecasting price movement. And let's just have a look at an Harami. Simple pattern composed of two candlesticks where the first candle exceeds both ends of the second candle. Now, both candles are opposite in color, and I'll show you this in a moment. It usually appears during a trend's normal retracement, indicates that the current direction is temporary and the price will soon switch direction. So here we have a Harami Cross, because the second candle looks like a Doji and is located within the range of the first candle. So, you know, it's within the range of the first candle, and it's called a Harami Cross here. We have a Harami bearish candle here, a pattern, and a Harami bullish pattern here. So bearish, when you find that you've got a bearish candle, and just before that, this second bullish candle, and vice versa with the Harami bullish. We'll have a look at this just now on the charts. Now, the long candle is followed by a white doji, and it indicates that price will go up. A bullish doji, in other words, it's still colored bullish. It could be green or blue, for example, in that case. And this is one of the most effective patterns in determining this. And a bearish Harami, quite the opposite. It consists of a long white candle followed by a shorter black candle. And that would be called a bearish Harami. All right, so let's move on just a little bit because I fear I'm losing time, but I think we get the idea there. The engulfing pattern. This is also comprised of two candles, the opposite of a Harami. Here, the first candle is smaller and within the range of the second candle. A bearish engulfing pattern appears at the end of an uptrend and is considered a bearish reversal signal. So here we could see, for example, this candle is bigger than the prior candle. It's an opposite candle. This was bullish, that was bearish, and it engulfs. The body of the first candle is within the body of the second candle, and it indicates a reversal pattern there. Basically what I've just mentioned there. So on the other hand, a bullish engulfing pattern can be found at the end of a downtrend and is considered a bullish reversal pattern. So quite the opposite here. Here you have the bullish candle, which could be white, blue, or green, whatever the color is of the candle. It's engulfing the previous bearish candle, black or red, for example. And it's completely engulfs it. You know, it's within the range of that body. It's almost like it could smother it if it had to wrap itself around it, right? So this shows that while the sellers were dominating the first candle, the buyers took over in the second candle and pushed price to close very high. All right, so now we've also got something called the piercing line. This consists of two candles with long bodies and absent of small shadows. The first candle is long and black, or bearish or red, and the candle is followed by a long white or blue or green, whatever the color is, candle that appears below the close of the bearish price. In a downtrend, this occurs. It's considered to be a bullish reversal pattern. So there we have an image of that, and it pierces. One could say it seems like it's piercing the other candle's midpoint. So in other words, this candle formed, the midpoint is here. The next candle, which was a bullish candle, went up and it pierced through the middle line of that candle there. So that's also another pattern that one could look forward to. Got something called the dark cloud cover. It occurs during an uptrend and is a bearish reversal pattern. And oh, sorry, I just skipped a slide there. The first candle is a long white bullish candle followed by a long black candle that opened above the close of that candle. So you could see here, this candle opened above the close of that candle there, and closed at a price below the midpoint. So it also pierced it, so to speak. So it opened above it and it closed above the midpoint. So that's just, many of you might not be familiar with this type of pattern, and I thought I'd include that for you, the dark cloud cover. And it means basically buyers were controlling the market during the first candle up till the open of the second candle, then the sellers took over immediately. Now, we've also got something called the evening star and morning star. Star patterns are composed of 3 candles. The middle candle could be a short candle or a doji, and the gap before or after it is absent or very small. So here's what we can have a look at with these two. Here on the right, on the left, sorry, is the morning star. So we've got the small like doji in between these 2 candles, and then an evening star pattern formed there. And that's indicated with the morning star that you could expect price to go down, with an evening star, the opposite, a bullish signal upwards. And 3 white soldiers and black crows. And I think many of you will notice these. These consist of 3 candles following the same direction. When the first candle is considered a reversal candle, the second longer than the first, and the third candle the same length as the second. So it would be something like this, where you'd have 3 candles, one after the other, pushing upwards, appearing after a downtrend. And it basically tells you that the market's consolidated and now it's gaining a lot of bullish momentum. And the black crows is the opposite of the 3 soldiers, 3 white soldiers in that case. Black crows because normally black candles would be used by traders trading bullish as bullish candles, although they could be red as well, right? And indicates a bearish reversal. So although candlesticks serve as excellent tools to forecast short-term reversals, I think you must be aware that they're not perfect. They don't always signal exactly what was expected. So they should not be used as a standalone system. There are people in the world who do trade just with the price charts, just with the candles and momentum and so on. It's possible, but the more confirmations, corroboration you've got, the better it is. You want to limit your risk, as I mentioned, but at least if you're familiar with some of these patterns, you've got an excellent chance of foreseeing that a potential reversal might occur. And then you would maybe be sitting, looking closely at your chart, waiting for that to happen, and not missing a trade, or knowing when to get out of a trade if there's a sudden reversal. So when applied in conjunction with other technical analysis tools or developed system of trading, it can definitely improve your trading performance by serving as a confirmation of your signals, or a warning sign, as I just mentioned, that entering a trade might be a bad idea at that stage. So let's just ask everyone at this point, is anyone currently using, and I know a few do, just let us know, have you been using any of the structure, the support resistance lines, or perhaps even some of the patterns that I've just covered now when trading? Have you been looking at any of that? All right, and I can't see all the chats. I'm presuming that people on Facebook and so on might be as well. So if you could just have a look at that side for me, Amir, and see.
Yeah, and we have some answers here coming. So John Klassen, yes. Jitendra, engulfing pattern. Michelle hasn't been adding it. Dennis, not that many. William, engulfing. Frederick, yes. Chris Brock, oh yeah. So he has been definitely using the add-ons. Yes, Lila Rose, excuse me. Yes, but not all. The trader says none just yet. Yes, I tried to learn more. Colin, yes. Piotr, yes, some of the patterns.
Excellent. Okay, so it gives me an idea that there's a mixed bag. Some are, some aren't, but all the better for those who are, just with your education. And for those who aren't, try use some of the support resistance lines and some of the information I've given you today. When next you're looking at a chart, even if the market's closed, just scroll back through the charts, see if you can identify any particular patterns that if you were in a trade at that stage, would it have influenced you whether to take the trade or not, or whether if you were in a trade that you would be thinking about getting out of a trade for that reason, if it was a strong indication that there was going to be a reversal to the downside. All right, so now I just doing a quick review of the most common questions, which I've just actually gone through at the moment. And before I get to the next part here of our stories, I just wanted to, let me just do this. I have to do a new share of the screen. I have to exit the screen. Sorry, just for a second, because I'm trying to get to the charts. And hopefully you guys can see it. Can you still see my screen in there? I hope I didn't press the wrong button or something.
Your MT4.
All right. So right now, what I've got open here is just a chart. It's a Euro USD 15-minute chart. We have been looking at the similar chart previously with the profit wave. I don't know if I'll get to analyze both systems, but the concepts are the same for both as far as candle price patterns are concerned. And what you can do is, if you're scrolling through a chart, I'll just show you here, you can add little shapes and triangles and things. So go to your MT4, insert shapes. For example, you could do a triangle in eclipse. Let's just do an eclipse for change, just so that, all right, so that did work out. Let me just try again. It's a bit finicky sometimes, but okay, rectangle. Now you'll see I've marked off here. So one could just take a rectangle, and you can mark off for yourself, you know, on your charts as you're scrolling backwards through them. And if you're scrolling back and you find, oh, it keeps toggling me back, you could just press between these. That'll take you to the front. Press this little button here, and it'll keep, it should keep, let's just see, it'll keep the screen movable, so it won't keep hopping back to the beginning part again, just so that you know. And okay, let's just go back to around here. So you could see, let's see, with the profit wave system, we could see a possible trade if one's looking just at the rules that have occurred here. So we're just looking at the rules, the basic standard rules now, right? Got the blue line crossing above the red line. You've got the step MA with the arrow in alignment, and you've got this blue histogram, blue line above the red. So you'd know at that point, well, I'm in for a possible buy trade there. Then you're looking at your support line. If you're looking at the most recent area of resistance, and simply took this, as I showed you a couple of days ago, you just take that line, draw a line across. So at that point, you wouldn't know, but what's going to happen afterwards. But if you were just looking at this candle in real time, you would see that it just touched that, it went back down again, and you would be waiting for it to break through that again. And I showed you that technique where you could set a pending order if you didn't get into the trade right then and there on this particular candle, which would have been fine. For this particular one, you would have set your stop maybe just about below this line here, and you'll take profit for 1-to-1, or you would have put in a pending order for it to break through that line. Now, how would you know if it's going to go up further as further confirmation? Well, there you've got a candle pattern there where we've got a bullish pattern forming, which tells us that it's about to go up. And almost, well, just over here, we've got 3 white soldiers. It should actually be this one, and that one, because they each is bigger than the other. So we've got 2 candle formations, patterns forming there that tell us confirmation at that stage when we're in the trade that yes, the trade is likely to take off. And even at this stage here, while we were waiting for the resistance line to be broken, we were fairly certain that at least it wasn't going to go in the opposite direction. It would take off to the top. And I mean, these patterns, you'll find them everywhere, right? So almost every candle there's a pattern. But there are certain types like those that I've showed you that are more indicative. Here we see another Harami Bullish where this is being engulfed, similar to this. And here we can see a whole bunch of candles. After price moved up, you can see a whole bunch of little dojis, dragonfly type standard dojis, a small hammer, this signifies after a few candles, well, something's definitely happening here. We're not getting a strong upward momentum. It's about to change. And then it did right there, right again. So look at the patterns, look at your charts. The best way to really do this is to spend at least an hour or so going through, and here we could see again at the top of this movement here, a whole bunch of these candle sizes are smaller, indicating that there's a lot of consolidation going on. The buyers are probably overtaking the sellers at that point, and it's a pattern that's formed there. So you'd expect, unless it's the end of your trading session, that which, as I mentioned before, you often see these small candles before and after the sessions, there's going to be a change in momentum. And there again, engulfing pattern and a mix of dojis and so on, telling us that things are about to change. And actually here we have another potential sell trade. And I think I was just going to show you this just to see that at the close of this candle, we had all the indicators were in alignment. We would have waited for price just to have closed below this level here. And at this point here, we were certain of that. And then could have set our stop up here, and our take profit would have just been hit there. But again, price moved up here. You could see a string of these dojis again. All right, it's about to head back down again. And, that's how it goes. And especially after that support level there, you would expect that once that's broken through again, that it would continue and it did downwards there. I'm just looking now, not necessarily at trades that you could have entered, but just trying to show you the patterns that are forming. A mixture of hammers and dojis here, engulfing pattern that could show that it's going to reverse back upwards. And we could see three strong, it wouldn't technically be soldiers here, but very similar and upwards. And here we could see over here an inverse small candle that we've already gone through as a pattern that would signify that price could move downwards. And as I said, it doesn't always work that way. Not always. As we see here, price did go up, but they do more often than not signify that there's going to be a change in direction. So it's a good idea just to, it's very hard. We'd have to spend a lot of time going through this, all the charts, every type of candle, but there's many of them on your charts. So I would say for your homework today, perhaps just go and have a look at, because the markets are about to close soon anyway, go and have a look at your charts. Try and identify candles. Try and, visually just get to see them, even if there's nothing else on your chart other than just a candle chart open. And just try and see, are you picking up any patterns? What are those patterns? If you had to add these other indicators, would it have given you extra confirmation that you could have continued with the trade? And I mean, here's a trade over here. I think I must have marked it off earlier, where I would have been expecting that price had reversed back upwards and all of our indicators were in alignment, probably around this point here, because we were waiting at that stage that I was looking at this. I was waiting for these to be in alignment, and would have seen that we had a strong upward moving candles here, and would have looked towards putting my entry at the open of this candle just after it had broken through the support level, the extra confirmation that it's heading up, and then would have looked at entering here, setting my stop loss below here, and setting my take profit up here. But as the trade progressed, you could see a candle signal to show that the market might actually start moving in the other direction, which it now has, and it's kind of tapering out. It's near the end of the day. I would probably, if I was in this trade, I didn't get into this one because I was preparing for this presentation, but if I was in this one, I'd probably be looking at closing it out now anyway, because it's going to go sideways. But I would have seen also that there's an indication here that as we're getting closer to the end of the day, market might just consolidate a bit and go into the opposite direction. So this would be an instance where your target isn't hit, but you could close out the trade if you felt that there were signals, enough signals to say that the market might well reverse at that point. And maybe let me, because I know it's getting on a bit, this is one of our longer sessions. Any questions that are from the group at this point, Emir? Let me maybe just take those questions now if there are any. Are you still there, Emir?
Sorry, yes.
Okay.
I was muted.
Sure.
There were a couple of technical questions that we answered, both me and some of the friendly attendees here on the forum. But they really love the patterns.
Okay.
Watch all of these again. So.
Okay, good. Well, I'm glad. Like I said, some of the more experienced traders might be aware of them, but also those that don't often apply it, So do keep an eye on it, especially with these simpler type systems. When I say simpler, I mean not as cluttered. The candle price patterns are often overlooked, and one is looking more towards what is this line doing and so on. And you can't see the tree for the wood. So for the woods, in other words, in that kind of if I can use that as an analogy, it's too dense. You can't see through all the noise to see what is just basically happening in the market. What are the candles actually doing? So that's also something that you should bear in mind. So at this point, I just want to bring back up my my slides, and thanks for commenting and so on. And as I mentioned earlier, we're getting closer to me announcing the winners of our $750 system prize and our $250 prize for posting your trades. I'll give you guys, obviously, a chance to send in some more over the next few days based also on today's lesson. Perhaps it's about the candles. You could say, look, Adrian, I got in or out because of these candles. Otherwise, I wouldn't have entered or exited the trade at that point, or some more with the Astral. I know not many people have had a chance to trade the Astral, and that's why we're getting more from the profit wave side coming through than the Astral. And we're still trying to get through the profit wave. So I realize it's been tight, but it gives us a couple of days to reflect, maybe look at some of the previous recordings, do our own studies, look at the charts. And then by Sunday, when we do our next session, I'm going to show you some extra confirmations that you can use other than this. I thought, let me just take it down to the basics today. I might have skipped ahead of this. So we'll have a look at some other stuff on Sunday, and you can still go ahead, please, and continue. When I say tomorrow, I mean Sunday, yeah. I'll have some, I'll show you that new tool that we're developing that I'm sure you're going to be very interested in on Sunday too. And I'll be reviewing more of the trades that people have sent through today and between today and tomorrow and so on, that I need to just go through and have a look at. There's been really a lot. I think we've had close to 300 comments already on the page. I've got stacks and stacks of emails coming through, and I look at them all. So, don't be thinking, oh, he's got so many, I shouldn't send mine. No, please go ahead and send them. I do want to share as much as I can with everybody. Like I said, I see us as a family, a group here. So I want us to move together as a group also. And so let's just repeat again. When you made a trade, any trade using the system or the profit wave system, please email a snapshot of your trade, just like those that I showed you at the presentation earlier on today, to support@acceleratingprofits.com. And again, Emir, sorry, if you could just please post that into the chat for the people. Just put the subject line 5-day challenge trade, and I will get to have a look at those. And in the next few days, as I mentioned, a few of you will get this $250 free system from inside my secret trading vault, which is a system reserved only for very few people inside that vault. And remember, please, to leave me a comment at www.acceleratingprofits.com. And again, Mary, if you could also post that for us, please. At the end of this challenge, a few more will also be awarded towards Monday. another free gift valued at $750 for doing so. And there's quite a few contenders. I'm not going to reveal anything just yet. I haven't made up my mind. I'm waiting still for more to come in. If you've sent something already, welcome to send it again. You're welcome to comment again. I just want to see some action taken for those of you who haven't taken any action. Just have a look at your charts. See if you could have taken a trade at least, or even just comment on what you liked about it or had a question about on the page. Some kind of an action at least tells me that you're doing something and that you're developing as a trader. So I'll cover more in our next session. And just a reminder, this recording of this session will go up within a few hours. Definitely by tomorrow, it will be up on the page at acceleratingprofits.com. And you'll also get a link under the main video on that page to register for the next webinar, which will be on the 12th of July, same time, same place. So I'll end it there, and I'm going to stop my share just to say goodbye to everyone. And oh, now I can see everybody on here while I'm doing the presentation. I can't. There's even more people than when we started. So welcome anyone who joined us a bit late, but don't worry, you'll get to see the recording. And there's John right up there in the top corner. John, I think I reviewed your trade earlier, right? And Billy, hi. And obviously, there's a lot of people here who don't have cameras. That's fine. Suzanne, how are you doing? And thank you, everyone, for joining me. It's so good to see you. I hope I've given some value today again. Some of this might be familiar to many of you, but I suspect that there's a lot of people on here who have not had a chance to review patterns and so on. And it's just a very basic thing. It sounds basic, but it's very important to understand these various patterns and get to see them on your charts. So thanks, Earl. Thanks, Billy. Well, I have to really lean in here. Peter, Vera, how's it, buddy? Mike, Bertram, how are you doing? And to everyone else, there's a few others there. Can't see you, but I know you're there, Fanika, and so on. Have a great weekend, guys. I'll still be on the lookout for your trades, and I'm going to see you hopefully on Sunday. I'll be around. I'm hoping to see you on Sunday, and let's get together then again. In the meantime, stay safe and enjoy your Friday, what's left of it.
Thank you, Adrian, so much. It was a really nice webinar. Just a reminder to everybody, tomorrow on Saturday, there will be no webinar. And then on Sunday, we'll meet again, same time, same place. So that would be 2 p.m. Eastern Standard Time. So see you all, guys, on Saturday. Get some rest tomorrow. Practice some candlestick patterns. And I'll be seeing you on Sunday, 2 p.m. Eastern Standard Time.
Excellent. Thanks, Amir. Cheers, guys.
Thanks. Bye. Cheers.